morning, good afternoon, good evening, yWhales, wherever you are in the world today. So today is Tuesday, March 31st. Bitcoin is at 28K and holding steady. And again, that's a huge relief, seeing as we've come up, over 10,000 just in the last couple quarters. And while we're certainly still in a very much of a bear market, and there's a lot of, kind of like, hey, is this a bull? Is this a bear? Wherever the case is, it's a builder's market. And so really what you have is a lot of the entrepreneurs and developers in the space that are really preparing for this next wave of innovation, the next wave of consumer adoption. And one of the problems that we face every single day in yWhales around education is self-custody. It's one of the main principles of Web3, which is, not your keys, not your crypto, that you can actually truly own your identity, own your assets. But that comes with some caveats. And let's start with most people should not have full custody of these assets. Most people should not, are not prepared or have not thought through the responsibilities of if you lose it, it's truly gone. Or if there's a problem, if there's a hack, are they really ready for that level of responsibility? And what we've seen is some of the most proficient and experienced people in the space still getting hacked, still having challenges. And so while we all dream of this blockchain, utopia that is promised for us of, being free of fiat and free of these oppressive governments around the world, the reality is that the services and regulatory requirements that they make us abide to do provide a lot of safety and securities. That being said, while we're still working towards that blockchain utopia, we have some very cool companies like CryptoLock, and Roger here's to talk us through what they've built and why. So Roger, let me just kind of kick it right over to you. And before we get into CryptoLock, how did you get here? Let's talk a little bit about your history, because you've got a very storied background on your LinkedIn profile.
Yeah. Thanks, Jay. Thanks for having me on. So I guess I'm a citizen of the world. I grew up in South Africa, studied in the US, was one of the first people on fintech in China for 10 years, grew a fintech business, went through all the roller coaster rides of all the regulatory issues that can happen in China. Eventually exited the business in 2018, 2019, took a break. Then I got into insurance. I had a bad leg break. And basically, insurance is great until you have to file a claim. And through a hefty claims process, that inspired me to do my next startup, which was modernizing insurance companies. So we started a startup called PolicyDoc, and our initial clients were actually cyber insurers, right? And what's interesting about that was that in the past 2-3 years, a lot of all the ransomware in cyber. So when there's a big data breach and a hacker is holding a large company for 5 million, 10 million records and asking pay me in crypto, that became the inspiration where actually CryptoLock became an idea of the cyber insurers who approached us because my CTO had started one of the earliest blockchain analytics companies, and they said, well, you guys may know something about tracing, tracking. We know you have the technology, right, to run these types of programs, but maybe we can put a combination of different services and technologies together to go after the people who are taking ransomware. So that became the inspiration for CryptoLock, and over the past 9 months, we've been, working with global law firms, cyber incident response guys, different types of asset forensics, understanding global regulation, hopefully to more of an extent, and in actual fact in developing CryptoLock. And ultimately, the basic, I went around the world for 9 months last year, asking everybody I met in crypto, asking them, hey, what do you do when you lose your crypto? And 99.9% of everybody would reply, I cry. I go to the corner and I lay in the fetal position, which, there isn't much of for the average Joe. And you alluded to this in the beginning of your introduction, is, with great power comes great responsibility. It's like not your keys, not your crypto. You own it. You are your own bank, but that also comes, okay, now how do I protect myself when I am my own bank?
Yeah, and I really love that combination of traditional finance experience and understanding how kind of the insurance markets works and everywhere else, and the fact that your current project, company was born out of necessity from existing clients, and I think that that's one of the things that gets missed so often, and with entrepreneurs is they build this perfect product, and then they go, this is beautiful, it's perfect, we're going to go find clients now. and it takes a long time in those client engagement cycles. So starting off with going, hey, we see a problem. We already have, we're already working inside this asset class. So it's enhancement of, even though this is an offshoot of, it's really great to see, again, experienced entrepreneurs like yourself starting to come into the space. And I think it speaks a little bit about the need for, kind of the experienced entrepreneurs and the ones that understand, product market fits and go to market strategies. And so it sounds like you've done fabulous. What's been some of the early successes just with client engagement, for the larger firms?
So on the CryptoLock side, it's basically protecting the treasury. It's also, so the interesting part about this is that we ultimately created a membership product to help clients save over 90% of the cost when it comes to compliance and recovery of crypto assets, or the cost of services for crypto recovery. Basically, in the early days, we've a lot of folks have come to us to help on the post breach in terms of, I've already been hacked. Can you help me go after the crypto and connect us with the right parties and talk to the right people? So, for example, when it comes to getting a lawyer, you need to get a lawyer that understands cryptocurrency and blockchain, and how to trace crypto assets, and have someone trace the crypto assets for the law firm. Another very interesting case is we've had a case where I can't talk too much of the details, but in general, there's a large hack, all right, tens of millions of dollars, and basically he has crypto insurance, right? And the insurer has not paid in over 9 months now, and he's gone about claiming from insurance. The broker has not done much for him. There's been a liaison between him and the insurer, and he tried to do all the forensic evidence. He tried to get all the reports himself, and the insurer has literally, laid down a letter saying, we've consulted these 3 law firms, and we need more evidence, right? And so, and on a technical effect, he has all the evidence, right? He has all the evidence. It just has not been put together, does not have the right letterhead, and a lot of time, as you and I both know, in financial services, it's a bit of a who's who, right? So if you don't have a recognized brand name that's doing your forensics, or your cyber, your on-chain forensics, etc., then it's hard to get the insurer to buy over and claim on that. So we're helping on a pretty large case in this case in helping him claim per se. So we've helped him in terms of getting the right people on board, the right law firms, having a right strategy, talking to claims adjusters in the space to get a better idea of what the game theory of this will be, and helping them along that process, basically.
Yeah, it's fabulous, and I appreciate kind of the need to protect your clients. Let's just dive right into CryptoLock and hit us with that elevator pitch of exactly what you do, the services, and kind of that clear walkthrough you do, and then I've got a whole bunch of questions on what's going on behind the scenes.
Yeah, definitely. So CryptoLock, we're a membership-based service that we're the only membership-based service in Web3 that will help you save over 90% of compliance and recovery expenses in the event of a breach or hack or rug pull. So if you lost your crypto, we have a network of elite partners, and we'll streamline the entire recovery process for you to recover your crypto. So in short, we provide you the best of the best to go and recover your crypto. And the best of the best is, geographically spread out. So it depends who, where, how, where your crypto has landed. Should we go after them in we develop a whole strategy through this. And these are services that are frankly not new. A lot of, the major exchanges have these services. When there's been a hack of, in the 50, hundreds of millions of dollars, a lot of the exchanges will end up spending at least $250,000 on these types of services in actual fact. So we're streamlining those types of services and making it affordable for the average Joe to go and basically, understand where and how, what's happened to crypto and go after the perpetrator, actually. So bringing more accountability to the space.
I love that. So let's start off with some of the misconceptions, so that people understand, the world of what you live in. Because in your space, which I believe is highly needed and really is part of what Web3 needs, is somebody to help protect first, and then do some due diligence afterwards. There's a lot of scammers. We see them all the time, and I thank you for coming on here, and it showcases that you did come on here to talk about this, because we have a lot of people. I'm like, absolutely, you can recover all crypto, 100% of it. Great. Come on in and let's talk about it. We never see those people. So let's start off with there are some, what are some of the hacks that are recoverable, and what are some of the ones that are not recoverable?
Yeah, look, so first misconception is I always tell people, like, listen, and this was really unbelievable for me last year, where, when I asked everyone what you do when you lose your crypto, and everyone says, well, I don't know, I cry. The irony of the situation is crypto is on a decentralized ledger. It's a blockchain. It's 100% transparent. And, I joke and I say, like, if you are going to launder money, don't use crypto, because, it is all traceable. The technology is out there to go through mixers, Tornado Cash, etc., etc. Okay. Second of all is we provide the services that everyone would need. Okay. And we've broken it up down into three separate stages. But to be totally, it's not a 100% foolproof guarantee. If your crypto lands up in North Korea or Russia, I'm very sorry. It's going to be very tough. But at least the least we could do is blacklist those wallets, and it would be harder for that person to change it to cash one day. Okay. And also on that point, that's where crypto regulation's going, is that VASPs, virtual asset service providers, the KYC AML implications on them in the past year or so, especially in light of FTX, Three Arrows, Celsius, all these guys, is going through the roof. Okay. So in this industry, they're called hops. A hop is every transaction that's called a hop. It used to be 2 hops. It used to be 3 hops, 5, 10, 15, 20 hops now of, providence on your crypto is not uncommon these days. So, look, but if your crypto lands up in Panama or say Rio de Janeiro, you have a chance. And if it's on an exchange, you even have a bigger chance, actually. So, as you just have to go through the right process and talk to the right people to go and put the pressure on and have the impartial third-party evidence that will make these people bend to your will, per se, right? And sometimes that has to come with the threat of saying, if you don't do this, I will sue you and I will make public everything that you're doing, right? So, or I will report you to the regulator, and I have the clout to do that. Now, you need the right people involved for things of that nature to happen.
Yeah. So, and again, and I think that's a perfect, kind of segue to understand, is that you still have to bring in the human element. We still, again, it's once it's identified and you find where it is, hopefully it's gone into an exchange. If it goes into an exchange, then that's the easy thing, that they have compliance departments that you can contact and work through that with them. The problem is when it moves a few hops and then sits in a wallet. If it's just going to sit in that wallet, and sometimes it sits there for years, there is no technology that can get past those seed keys, can get past the cryptography. And I think that's really a good point that you've made, that it does need to move, and it does need to kind of go into something that is recognizable, or at least identifiable.
Yeah, definitely. And like there are, so on that point, there are also ways to go after that wallet, right? So, or at least have there's usually always a digital trace with these things, right? Or yeah, so
Mm-hmm.
a wallet needs an IP address. An IP address is linked to, has certain distance to a node and such and so forth. So there's a bit of like detective work in triangulating where the crypto's gone. As soon as we can get an identifier on that wallet, this person, crypto is now recognized as property. So this person is dealing with an illicit asset that's been stolen. So, and if that's so, that can be proved in the court of law. And if that's proved in the court of law, if he does want to return the crypto, then okay, fine. We can go after. You can freeze his bank accounts. We can go after his car, his house, or his other assets, essentially. So I think that's also a very key part, and that regulation really only got updated in most jurisdictions 2 to 3 years ago.
That's amazing. So we know, kind of everyone has that moment where they go, oh crap. And, I've fell for fake, smart contracts and fake mints, and, had a variety of things happen, and knock on wood, never had a full loss, but, had it been like clicked on the wrong thing and go, oops, there goes that. But talk about the prevention side of this, because the recovery is really the hard part. But I think most people never want to get to that point. And you guys have a couple products around keeping your crypto.
Yeah, no,
so talk through those.
So first, number one is we also provide wallet screening. This is also something that everybody should know. Is before you transact, or if someone's going to send you or you send crypto, you should make sure that he's sending it from a clean wallet, because KYC AML is literally going through the roof in this space, right? So if you could send crypto from a wallet that is maybe within 5 or 6 hops of an illicit transaction, you could be tainted, and it's almost like your iPhone being stolen and you brick your iPhone, right? That is going to be very hard for you to basically convert that crypto to fiat on any legitimate type of exchange. Okay.
Mm-hmm.
The second part of this is transaction monitoring, right? So the faster you act when something happens, when a rug pull, crime, fat finger, or however you may, crypto is being moved from your wallet address, the faster you act, the higher likelihood and chance you have of recovering crypto. So just like your credit card, if someone were to swipe your credit card, you would get an SMS, and actually this has happened to me twice in the past year where I've had to replace 2 credit cards. Someone swiping my card at an Apple store in Hong Kong when I'm in Singapore, right? So you can freeze and act on that transaction. If you let it go for 2, 3, 4, 5 months, it's very hard to reverse that transaction. So similar concept to crypto. If your crypto starts moving, you would get an SMS from us saying, did you authorize this transaction? Do you know you're sending crypto to a sanctioned entity? Do you know this crypto is being moved? Did you authorize this? If so, did you? If you did not authorize this, begin the recovery process immediately and start tracing, basically.
That's amazing. So, and I think that's really an interesting point, because wallets are really like simplistic in nature at this point. There's no, you can't hook an email address up to it. You can't hook any alerts up to it. You can do Etherscan or sign yourself up. But I'm going to say a majority of users in the space, are very basic in nature. And while I know people that hold millions of dollars of crypto, they've never logged into Etherscan. They don't know how to use it. They bought a bunch of things on Coinbase or Kraken, migrated it to a wallet, and they just leave it sitting there because they go, hey, in 5 years, this is my goal. But without some sort of monitoring service, they could come in 5 years later and that thing was stolen on day 2. So, how does that work for the monitoring? You're just watching wallets that are from your members?
Yeah, exactly. So the unique part of what we do is we charge per wallet per se per membership per wallet basically. So the wallets
I'm
need
in
to be
trouble.
pre-registered with us. The wallets need to pre-registered with us. We monitor it, and any likelihood or event, we would notify you.
That's awesome. So talk through some of the stories, because I'm sure you have a lot of them, of either some of the successes as well as some of the challenges you guys have faced, with some clients, because you've been in the space now for a little bit.
Yeah, yeah. So it's been a couple months already. So some of the successes are on the consulting side, helping folks go and recover the crypto, protecting treasury wallets. We're doing a lot of education on you know crypto insurance and how how useful or non-useful it can be, and how to supplement. For example, a lot of the custody solutions, the BitGos, Fireblocks, Coppers of the world, or a lot of others, do come with some sort of insurance. But actually understanding what that insurance entails and actually how to use it, because if you are to claim on that insurance, you're going to spend you will ultimately have to prove to the insurer. An insurer's not going to pay you millions of dollars overnight. Okay, so there are those challenges where you do have to go through it. We've also had large crypto gaming companies. Went talks with some large crypto gaming companies saying like we want to create a safe haven for our tokens, for our games. We don't want our users to be worried. We need some sort of mechanism to basically, we don't have a compliance team, and we need to prove to the regulator that we're not doing anything illicit or illegal, right? So those are some of the wins or winning sides that we are coming on. I think another challenging side of this is we ultimately are bringing transparency to the market, right? And that may not work out in the best of nature for VASPs, or that are misappropriating or mismanaging clients' funds. Do they have to clean up? Are they going to self-implicate themselves? So yeah, it is quite tough to find that honest, to find that VASP that wants to preempt the market. I ultimately do believe that this is where we're going, right? Is to a point of DeFi, self-custody, non-centralized things. If it is centralized, it's going to be highly regulated. If it is highly regulated, you do need to have all the reports or the monitoring. Need to say to an auditor, like, I'm prepared for a breach, and I have these services on standby. So that's kind of some of the challenges, and of course also like us being a pretty new service, how do we price it? What is the kind of price point for folks? Are we over engineering a lot of things? Because we do, our full coverage goes up to $200,000 worth of services, right? So the concept also of insurance in this market, and they always say insurance is not bought, it's sold, it's sold, right? So
Yeah.
just trying to educate folks on this is why you do need this type of product.
Yeah, and I don't think this is totally brand new. It may be slightly different in the Web3 space, but I mean, like, people will say I'm stupid, but I have LifeLock, and I have a variety of
Yeah,
other services that monitor my credit. But LifeLock, I pay a monthly fee, and it does the monitoring. And if there's a problem, then it's got that built-in insurance that they're going to go deal with it. That's all they do. That's all that law firm does. And I just, it makes me feel good to pay my little whatever fee a month for myself and my family, just to sit there and monitor our social security numbers and make sure that our credit's not being used in an inappropriate way. And it does a couple other fun things, but
100%.
this is almost the same similar model, meaning that, like, hopefully everything's fine. But in the event something's not, then here's the team that is automatically going to engage versus, if something does happen to my credit or something does happen to my crypto, then you have to kind of start from scratch, going, who am I going to find to help me with this?
Right. And the caveat here is that if you are on your own and you want to go about it in your own way, that's It's a maze. It is finding the right people, getting in touch with the right contacts, doing things in the right order. We've had stories where, someone had high level contacts at the FBI. It was only a few $1 million. And basically, for the FBI, that's a small case. They're not too
Yeah.
concerned about you, the private citizen, but they are concerned about the big few $100 million hack that would make someone's career within the FBI, right? And the irony with that is that if the person were to use go through a law firm and go through our streamlined services, they would have. There's a high likelihood they would have recovered the crypto essentially.
Yeah, and I love Web3. Like I love blockchain. I love everything that we're doing. I just will say there's a couple major problems inside Web3, and I always say that it's two of the largest, not the only, but two of the largest is bridges and wallets. I have yet to see, and I see all the new wallets that are coming out. I've worked with a bunch of teams, and I just say that every wallet is just falling short from actual what consumers need. Because as you well know, number one, you're charging by the wallet, and that's fine. But I have dozens and dozens and dozens of wallets, and I do that to kind
Right.
of keep my assets around in a variety of ways. So I know which is which, and I expose which wallet I want to which deal. But at the end of the day, that's not easy for me, and it's also hard for you. What's your thoughts on kind of where what the best system is for managing your digital assets? Is it just put them all in one, or use one seed key and do a variety of sub wallets, or should it be entirely different seed keys across a variety of wallets?
So yeah, I personally think you got to diversify, right? You have to have different wallets, different types of storage, moving around, etc., etc. So like this, the space is constantly evolving. We've had there's so many cases of where even with new wallet software, that someone actually mimics the wallet software, installs a malware, and creates their own site to download. We've ran into cases where with WhatsApp, someone created their own WhatsApp download malware and implanted malware, and all the WhatsApp malware did was when someone sends a Bitcoin or crypto wallet address, it just changes the address to their wallet. So ultimately, you're sending to that malware installation's wallet. So also the unique thing with CryptoLock is that we can also customize a lot of the offerings, so we can sell in bulk. So if you have 10, 15, 20 wallets, and we've already built the technology to manage all the memberships or policies around this product. So, if you're moving from one wallet to another, this one becomes redundant, irrelevant. You can cancel this wallet, move it to another. And what's also interesting for the consumer side, at least in the we've broken up the coverage to stage 1, stage 2, and stage 3, but we can make membership pretty cost effective actually. So we can, for a few dollars a month, right, per wallet. Hopefully that's not too much. Or as if you want full coverage for something, it can go a bit higher to a few $100s, right, per wallet per month, depending on how important that wallet is. So if it is like your ledger in a vault somewhere, that is your kind of reset savings type of thing, you should have a lot more coverage on it.
Yeah, and I think it's really hard for users right now. And to be clear, I don't believe we're in mainstream or even close to mainstream yet for cryptocurrencies or blockchain technologies. I think we have a long way to go because it's just not a safer system. And now what you're doing, I believe, is definitely moving us in the right direction because you're helping with a little bit of the preventing some of these things from happening, but also kind of the hey, immediately what happens, let's make sure it stops. And even if you can't stop that one, hopefully you're identifying and stopping others, because at the end of the day, it's still humans at the other end of this that are stealing it, and there's only so many of them that are kind of working in the space like this. They're just very efficient and they're very, very good at what they do, and it comes a lot from most users just total lack of understanding of the space and their thought of
100%.
this security theater that isn't there. Like, yes, the cryptography is immutable. You're not going to get through it. No one's going to hack into your wallet, but most likely you're going to give it away is the reality.
No, right. And I think that's a very important point, right? For mass adoption in the space, people do need to feel safe, right? And you can't have safety without any accountability. So, hacking or crypto crimes are increasing over 60% year on year, and only about 5% are being recovered. Now, that's also due to a lot of lack of education. So it's a lack of education, a lack of awareness of the services that are out there, lack of affordability of these types of services because they are very specialized at the moment. So yeah, definitely for global crypto adoption to increase, definitely needs to people do definitely do feel safer, and at the same time we need to, and part of this is bringing perpetrators to justice at the end of the day, right? So yeah, if you like, I grew up in South Africa, right? So if you steal a car or something, you could be you go in jail and you out in a week, right? So that's why it's one of the highest crime rates in the world. So this needs to, we do need some sort of enforcement here in crypto.
Yeah, and it's there's a lot of different ways to steal crypto. That's why I'm always so concerned about it. There's entire wallets that I move things to, and I just remove them and just hide the seed keys away, and those go into cold storage, and that's where they kind of need to be. And it's not that I don't want to have more active use of some of these assets. Some of them are NFT, some of these things, but you really have to be very proactive. And so I find myself spending way less time in the space, nowadays than I did before, because all it takes is one or two hacks to kind of really disenfranchise a user. And this is all I do all day long is work in Web3. And there's a lot of people like yourself that come in and they go, "Hey, here's my project, here's my protocol. I'd love you to test it." And I go, "That's great." And I'll look at it and I'll look at the code and I go, "Okay, I understand how it works." And I just move on, because it's one of those things that even for the best intentions, and that's the scariest part, is even just signing that certificate and having used it, can months later, someone can go in and adjust that signing and the certificate. And without your knowledge, you can be in cold storage at the time, can do some malicious things to your wallets and assets. And I only know some of these tricks, but I'm sure you can tell us, how dangerous this stuff is.
Yeah, no, definitely. And, so you'd be surprised at how many OGs in the space, right? So like there's a lot of guys putting up in the past year, I was speaking to a lot of people, a lot of guys putting up a brave face, the so-called experts. But then when I mentioned, hey, this is what I'm developing, I at least a lot of the time I get the, "Man, I wish I knew about this 6 months ago," because casually we got an 150,000 NFT got stolen, or I got a free airdrop into my MetaMask and I clicked the wrong button and suddenly my whole MetaMask got emptied. Or, we set up a hedge fund and $6 million went missing, right? So, and these are the experts in the space. And I don't claim to be an expert. I'm definitely an enthusiast, but it always just reminds me of Mike Tyson saying is that, everyone has a plan until they get punched in the face. Then what do you do, right? So yeah, and part of the value proposition of what we say is like, let's make the best of the best affordable and get them to back for you. So if you do get, if something does happen to you, you're not like crying or laying in the fetal position in the corner. I mean, you're being proactive about what you're doing, and it almost also brings me back to the 2008 financial crisis, where it's almost like, well, overnight everyone lost a lot of money, but everyone didn't know how a bank worked, right? And what were CDOs? What were all these what were ninja loans? Things like that, right? So part of this is understanding, having the awareness and the education, and taking and having the responsibility and having and being armed to understand what to do with that responsibility, right?
Yeah, I think I think the part you just talked about, having a plan, is so needed in the space when you're kind of saying, hey, I'm raising my hand and saying, I want a custody, I want to handle this. And one of the funny things that just happens to me every now and then is, we have 13 plus hundred members all around the world. Generally, for a lot of these, we're their only kind of Web3 resource. So, they watch our podcast, they come onto our private events and kind of work with us under Discord. And, probably once a quarter, if not a little bit more often, I'll just find a whole bunch of random things show up in the yWhales.eth address, and or I'll get an email like, hey, my wallet was acting weird, things were disappearing, I didn't know what else to do, I just sent everything to yWhales. And I always, of course, let's go look at this, let's take the contract, let's see, oh yep, it looks like what was happening here, yes, you did save some of your assets, and great that you remembered our .eth and sent it over. That's not the best backup plan. That's like, it's great, me, yeah. And I'm absolutely going to send it back to you, and we've done a lot of those recoveries. But it's also kind of, it showcases that you do need to have exit plans. You do need to have like, oh crap, I just clicked on this, I think I'm exposed, what do I do now? And so, I'd love to hear kind of how you educate your members on that, what to do when you suddenly believe there's a problem.
Yeah, so when you believe there's a problem, we basically say, let's begin the trace immediately. See what's going on. How's the crypto moving? Is it staying in one place? Is it continuously moving? A lot of these hackers are very sophisticated, so it's thousands of wallet addresses moving and moving and moving. Thankfully, a lot of the tracing technology these days has come a long way, right? So we can ultimately trace it, right? But that's ultimately where our service hopefully brings its value, is that once that breach happens, like, go for it. Begin immediately, right? Just don't sit around and wait. And once there's a big difference when you are the antagonist versus being proactive about something instead of being the victim and being reactive, right? And bringing that expertise available to the average Joe.
Roger, this is so much fun. Again, we talk to so many people all the time and they're struggling with this. I mean, they're really, they love the idea of Web3. They love the concept of blockchain and crypto, and they're either they've heard horrible stories or they've had something bad happen to them. And it's really hard to kind of move past that at a certain point. You had a couple good stories already, and I'd love if you have any more just to kind of talk about those plans, what it takes to plan and why they need a plan. If you've got any more, because I think those are so relevant.
Yeah. So as I was saying, like, everyone has a plan until they get punched in the face. So, for example, one of our clients, 2-3 years ago, they were pretty much bragging to the market that they had crypto insurance, and one of the first persons to offer crypto insurance on their custodial types of solutions. And then suddenly got hacked, and then suddenly they found out that crypto insurance was not what it is advertised or to be, right? And it's a very interesting thing, because insurers eye this market. They would definitely want to get in. We talked to a lot of them, and they also get in haphazardly. So they've adjusted policies that were otherwise used for other purposes and brought it to a crypto context, and those policies are very hard to prove, or very hard to, or very, very low risk percentage on that risk event actually happening. So, in this certain case, the client hasn't been paid out in over 8 months. They've gone about getting different types of forensical types of evidence from outfits that are not respected by the insurer. The insurer has enlisted 3 different law firms to hope, because this is the first claim on the portfolio, and a sizable claim per se. they never really planned to pay on any of these policies, that they've enlisted law firms to kind of protect themselves, right? So isn't this just so typical of like the large traditional world also bullying new innovation, right? So we've also act as a type of a wedge and a niche in terms of bringing impartiality to the situation, as well as using the same vendors that the insurer otherwise would use, so there would not be a reason of doubt in this certain instance. So this was something, and I'm sorry to say, this client of ours has basically spent a lot of money with the wrong vendors, and if he had and not only money, but the time, it's the stress, it's the he has to explain to shareholders, he has to explain to his clients. You can imagine the amount of emotional stress someone goes through in these types of instances. So that's also where we found a lot of value for our services. And I always thought, like, I mean, again, what brought me back into insurance is, like, insurance is great until you have to claim.
Yeah.
then that's until you use it, right? So
yeah, you're going to sleep
exactly,
good
exactly.
and showcase that a policy, but I always say insurance is just a really expensive loan. So it's, they'll pay it out sometimes, but don't worry, they're going to get it back and more. So it's a tough deal even in traditional insurance rates. So Roger, as someone who's a professional in the space, you spend a lot of time in this, you think about this, you've worked in and around the industry. Over the next couple of years, as we continue to see, innovation, we continue to see adoption, hopefully global adoption, starting to hit the real numbers that we need to, which is not, the same million people and a couple people on exchanges. We actually see people using it for tickets, using it for, purchasing in stores. Like, we actually see, traditional credit cards, being replaced by blockchain based wallets and other things. What's kind of your thoughts of some of the things that are needed, or just, around the concepts of what it takes to get that global adoption?
Yeah. So it's interesting. One of our partners in the kind of cyber incident response things said basically, like, the war hasn't changed, right? We've been, in terms of financial, cyber, data, whatever, war hasn't changed. It's just the context of war has changed, right? So in crypto, same thing, right? There's still financial wars, there's scams, there's this, economic whatever, right? So, so that's exactly the case for this global adoption, is in terms of, like, called crypto police, for a lack of a better word, that ultimately will be able to provide a lot of the enforcement. And I still say to folks, the metaverse is great, but your physical body cannot be uploaded to the metaverse yet. So you still live in the real world, and not yet, right? But we know that's coming, right? And but you're still in the real world, and if your life sucks in the real world, it's quite inhibitive for what you do in the metaverse at the end of the day. So like, I think compliance, KYC, AML. I think in the past year or so, we've seen the reaction from governments, FTX, all these types of things have sparked a whole outpour. Singapore, that used to be such a crypto-friendly nation, the MAS is kind of, basically starting to put up a lot of red tape and things like that. So so that's, on one side, it could be construed as a good thing, it could be construed as an inhibitor. At the same time, navigating around these types of compliance laws needs to, that education needs to transcend into the average Joe or the new crypto startup on, how and when, what, why, and how to do it, basically, right?
Yeah, I love that answer, and we're big fans of compliance and regulation, and I think that too often it gets a bad name, and it gets bad name from the people that are trying to do maliciously bad things. And so right. I would say that anyone, I think Brian Armstrong is really coming out and saying, like, we're fine to be regulated, like, we have no issue. KYC, AML, OFAC, like 100%, bring it on. We just need some rules to play by so that we can make sure that we're filing the correct the correct paperwork, everyone's paying the correct taxes, and I think think that really throws, a lot of people off because they don't understand, oh, this should be a tax-free system. It's not going to, it's never going to be. You're just using a different form of currency, but it's essentially the same deal. And I think you said something earlier that I really loved, which is this is not a better system of which to do fraud. If you want to go do malicious bad things, there's pieces of paper that, the various governments will give you that are untraceable, and you can go do lots of terrible things with those. And they are completely like move, pallets of cash around. All the governments do it specifically so that it can't have any electronic footprint. Crypto, as you said earlier, is one of the worst. You can trace these things, and you can trace them for years. I mean, they've recovered stolen crypto years later. I mean, I think you're definitely getting much more efficient at it, and we're getting better tools, systems, and understanding. But that being said, it's the Wild West still. And so, we talk quite a bit about what does it take for institutional adoption. And the general way that I say is, for these large institutions or family offices, I said, would you take 10% of your fund or your treasury, and would you put that into a bank account? And they generally ask which bank, and I say, pick anyone you like. Sure, we'll put $10 million in there. Cool. Would you put $10 million into USDC? And generally the conversation ends. And that
Right.
just showcases that it doesn't matter. Like we're on Fireblocks. I love it. I think it's great. I think they're one of the greatest, custody situations out there with rules and regulations. And I mean, my God, do they do a good job. We've recorded a couple of podcasts with them, but at the end of the day, even sitting on chain, there's still, is there a problem with USDC? They don't know. Is there a problem with various, things that we're not even aware of yet? And so I think that we're still so early, that gaining, what you guys have done at CryptoLock and as well as others, that we're just trying to create at least a fair playing field, and also try to give some incentives for people to want to be on blockchain, and also disenfranchise some of the bad actors from seeing and making this such an easy target. Because right now it's just too easy.
Yeah, and on quickly on that point, it's also like if you ask a large FI to put 10% of the deposits in USDC or any type of crypto, then again it comes back to the point of, hey, what type of insurance do I have on that deposit, right? And this past week or so, we've seen 2 banks go under, right? So that's and then again, and I'm talking. I mean, the insurers are trying to be innovators in the space, but I can tell you firsthand when after dealing and selling and working with insurers, this isn't a hit or on them or anything. They need to be ultra conservative, right? So for them to provide products into crypto, it's going to be an ultra conservative product where you definitely have to read every single line of the fine print. Otherwise, you need to know what you're signing up for here. That's all I can say.
Yeah, which is crazy in its own right. Roger, I thank you so much for coming by today. This has been absolutely fabulous. Where can people find you if they want to learn more?
Yeah, please email me, roger@cryptolock.ai. Check out our website, www.cryptolock.ai. Definitely can, we would love to see how we can help more protect. Also, we also issue digital certificates for folks who have their crypto monitored. So if they wanted to prove that to their clients that, there's no misappropriation, if something would happen, there would be a whole transaction report of what would happen to funds. And so ultimately bringing, as again, transparent, safety through transparency and enforcement base. Yeah.
I love it. I love it. yWhales, this is Roger and CryptoLock. Thank you so much. We'll see you guys next time. Be good.
And thanks again for having me on, Jay. Great conversation.
Anytime.